two tech titans with a tale of two different earnings stories tonight. Yahoo's first quarter earnings surged 36%, but at Intel, profits fell 26%. They are the first batch of technology companies reporting this week and could set the tone for trading in tech stocks tomorrow. First, let's look at Intel. The world's biggest computer chip company earned 40 cents a share. It was a penny below analyst estimates. Revenues fell 2% to $12.6 billion, slightly better than expected. But the company said revenues in the current quarter will come in higher than forecast, and so Intel shares jumped as much as 2% in after-hours trading before pulling back. Meanwhile, Yahoo earned 38 cents a share. That was 14 cents more than analysts expected, but revenues came in below estimates at $1 billion, and the company reported a drop in display advertising, disappointing investors. Yahoo shares tumbled more than 4% in after-hours trading.
And on the heels of Intel's and Yahoo's mixed results, there's another technology giant set to report next week, which may reveal more about the shift by consumers to mobile computing and the health of the tech sector as a whole than any other company. In tonight's installment of our series Earnings Spotlight, Jon Fortt tells us what investors are expecting and hoping to hear from Apple.
If there's one tech company to focus on this earnings season, it's Apple.
It's an important quarter for the iPhone and iPad maker. Of course, investors would like an increase to the dividend. Now it stands at around a 2.5% yield. They'd like something closer to 4%.
The stock is trading near its lowest level since the early days of 2012 because of worries that the days of dizzying sales growth and profitability at the company are over.
Yeah, expectations for the March quarter keep ratcheting down because we are in the middle of a product refresh vacuum, right? But it's not only the March quarter that investors are concerned about. They're concerned about the June quarter, right, which may show even more signs of a slowdown as the existing iPhone 5 and iPads start to show some age and in front of the next launch of those products.
Apple has already poured cold water on Wall Street's hopes for surprise upside, saying sales will be up 5 to 10% to around $42 billion. Margins will be down. And unlike in the past, this time management promises those projections will prove accurate. A key storyline to watch with the stock, PC versus mobile. PCs are under plenty of pressure with shipments down nearly 14% in the first quarter, according to IDC, as consumers opt for phones and tablets instead. Just ask people how often they're buying a new home computer.
Never, because I have a Mac. So, and as far as my Mac goes, I mean, I have iPad and a lot of tablet handheld devices. So those, I mean, we get new rounds of those every couple of years, but no PC except at work.
I think I use my iPad more than I use my computer, almost to where it's almost obsolete in a way, to where I don't even touch it. It's almost pointless to have one almost at this point.
Bottom line, investors are looking for a reason to continue believing in the surprising stock market rally we've seen so far this year. Optimism from Apple would go a long way. For Nightly Business Report, I'm Jon Fortt in Cupertino.